Hi everyone, welcome to a Monday Rapid Fire. Let's crack straight in. I'm going to go to Bitcoin here to have a real high level look at what is going on. Now, this is, in my view, a period of the market that is entirely as frustrating as having massive red candles just fall through the floor. And that is the boredom sideways chop phase where people just pulling their hairs out, potentially doing short-term trades, trying to chase pumps, which are fleeting. But broadly, it is just low volumes, a crap fest essentially that frustrates you into making unforced errors. And this is really a good time, in my view, to look at your portfolio, set and forget, have that medium to longer term focus, and close the laptop, go touch grass. That's what I've been telling the masterminds here. While we can get distracted in the short term noise, the levels that might get 60,000, of course, could drop us a little bit lower. Just have that longer term vision here and don't get chopped up. That's the biggest thing you need to do right now is capital preservation and your investment thesis. You need to preserve what you actually had envisioned when you started your portfolio. And I'm looking at the weekly here. What is Bitcoin doing? Well, you can see here the highs 2021, that's 62, then 69,000 here. What is Bitcoin doing here? Made an all-time high early. We've essentially broken through that resistance band, and all we're doing is coming down to retest it as support. So that breakout like that. So a massive cup and handle forming for an eventual breakout. It's, in my view, it's like a magnet going higher, and you just have to have that longer term conviction on where this market is going. Yes, the short-term volatility can be distressing, it can be alarming, but if you're feeling that way, you need to address that, and maybe your approach isn't right. If we're having a look here on Bitcoin on the weekly too, the Stochastic RSI is at the bottom, it's about to cross over. That's a really great position for it to be in for a trend change. You can see we're down here at 26,000 before that big main thrust when the Stochastic did the same thing. Also back here, Stochastic did another similar thing there as well with a spot premium, which I'll tell you about in a sec. Also here, the RSI has fallen from the power zone. That's fine. We've actually got a lot of room to run back up. If you look on the monthly too, the Stochastic RSI is still in a really nice posture. Same with the RSI as well. It's just hovering underneath the power zone. So again, it's on the bulls here. If the bulls want to thrust this higher, they absolutely can, because we haven't broken down support. We're also seeing negative funding across the board, which I'll quickly just show you here. This is a fantastic sign. So longs are being paid to stay open. So the market is positioned majority short at this position in the market. So people are shorting Bitcoin into support, and it hasn't broken. So if there ever was a condition for us to have a pretty nasty short squeeze, meaning a rally through those moving averages and those levels above us, this is a pretty good environment to have it, because there'll be a cascade of stop loss orders which will get taken out on the upside and can propel us higher than you might think. This generally marks a key inflection or a pivot point. Also, we are using right now, this is our Glassnode access. We're using the short-term holder average cost basis, essentially short-term holder cost basis, the realized price there as support, and that's hovering around 60,000. So we have a support band beneath us. Doesn't mean we can't lose it, but in a bull market, we use that as support on the way up. You can see we lost it around here in September 23, quickly regained it, and since then we'll be using it as support. So that's really, really important. When it drops beneath that, short-term holders are at a loss. Okay, this is really important too. So this is Velo, a really good resource that I use to check on spot premiums in Bitcoin. So meaning that there is a premium to buy Bitcoin on exchanges, and I don't know why it's not working. There you go. When derivatives are in control, so when futures are in control, the market has a tendency to have big whipsaw moves, and it's not healthy, it's not natural. The market needs to eventually flush that out and correct. If we go over to the daily on Bitcoin and we bring up the spot premium, aggregated premium here, this means that spot buyers are in control of the market. This is incredibly healthy, and when it starts to tick over back into a spot premium, it generally marks short-term local bottoms in the market of a big downturn. You can see here when it reached this kind of level here, the derivative premium fell away and we went back into a spot premium. So meaning a lot of the derivatives got rinsed, and then the spot buyers were paying to buy spot on the exchanges. They were seeing value, they were buying value. So that's that key area there. You can see when we started just launch towards 73,000, we're in this really high peak sort of zone. The green is all there for you to see. The derivatives were very much in control, it was overheated. It was very leveraged. And eventually she got flushed out. And when we had this big move down here, spot premium took over again. It wasn't the final low there, obviously, but all through this area, the spot premium is super strong. So dip buyers are in here right now, and eventually this is going to turn higher. That's just my view, and I wanted to share that data with you. Also wanted to share this with you. It's just dropped from El Salvador. They have now put their entire Bitcoin holdings into a government website here. They have their own meme pool as well. It tells you their exact holdings, their change over the week, and where it's all going. So I found this really, really cool, and you can check it out yourself. Bitcoin.gov.sv. Guys, also pay attention to trends in the market right now. AI appears to be a big one this week. Also, meme coins. You just cannot get away from meme coins at this moment. Pepe looks phenomenal. Looks like it wants to, really break higher. So, and my view is on this. My interpretation of why memes are doing really well is because they're so transparent. We know that they're speculative, they're gambling, they're not trying to be anything they're not. They're fun, they're volatile. People like to use them. They're easily accessible for an investment in trading, or whatever. So lean into it. If you're seeing volume, if you're seeing popularity in these things and trending markets and whatnot, it's pointless being in Ethereum or layer 2s at the moment when the spot Ethereum ETF in the US just isn't coming anytime soon, and you're seeing the performance in some of these meme coins. You want to have some exposure to that in your portfolio. Now, I just wanted to tick back to Bitcoin, because while I sound a little bit bullish here, and I actually feel quite bullish as we move into support at 60,000, because we haven't lost it. And I think bears are getting a bit cocky here, and I think they could get their faces ripped off. But just broadly, close above 64,000 and bullish again, lose 60, bearish, and that's pretty obvious. But if this, then that. Also on the weekly, we've got a bearish engulfing candle from the last bull hammer over here. So the body of this candle is bigger than the last. So that's something we have to pay attention to. So we could get a resolution to this whole sector to the downside, this week before maybe a move higher, or, we just chop lower. That is, of course, on the table. We also have a very clear downward channel that we are trying to break out of here, but it's lower highs and lower lows. So you just have to remember what type of market we're in this shorter time frame. If you are doing and looking at that, looking for buy zones, we really want to see a change of that trend with a new high, low sort of system. And if we go down to the daily, look, it's really on the bulls here. I think they can do it, but they need to show some strength. And a short squeeze would really, really help. But this 100-day moving average, this orange line, is so important to reclaim. And you've got the 20 and the 10 and the 21-day moving average up here, the EMA, and just the normal moving average just above. So a lot of resistance here. There's definitely a squeeze coming through this region. I can definitely see it moving to the upside to 64,000. But this is that kind of area where if we get knocked on the head here again, like we were there, like we were up here, we can fall down to that deep value zone at around 52,000, absolutely. So you can just see how important the 100-day moving average is. RSI looks actually really good here if we're going to break out. It's just these lower highs, almost a trend break there, but we want to see that move through. Stoke RSI crossing over here just on the power zone. So I've given you a little bit extra here today, guys, because I know it is sort of a tough, frustrating time of the market. I want to share a little bit of extra insight we do with the masterminds. And with them, I went through Pepe, AGIX, FBTC, Stacks, and Arbitrum. So if you're interested in becoming a mastermind, make sure to reach out to the team. But yeah, hopefully you've enjoyed what I've shared with you today. Just some different thoughts in my mind. I see a lot of bearishness out there, but I just don't think it's warranted when we're holding support, and when I'm seeing a lot of data that backs up that the bulls can really easily reverse the situation very, very fast. So have a wonderful day. Catch you again next time. Bye-bye.